Hello, everyone. I hope you all are doing really well. And welcome to this day three of advanced performance management classes. In today's session, we'll be getting started with, you can see, environmental influences. And now, with this, see, this topic we would have already covered with basic scenario in performance management and management accounting. Here, when we get started with this, when we talk about environmental influences in performance management and performance assessment, it is understood already in the content of the syllabus that you have proper knowledge or you have basic understanding of performance management and also for management accounting. All right. So now, as you can see in here, there is some assumed knowledge which they are telling, which is expected values, maximax, maximin, minimax, regret, stakeholders, and stakeholders matrix, which is nothing but the power and interest matrix of the stakeholders, and the Porter's five forces model, which is very important and given by Michael E. Porter, which will be explained, like, what are the threats and what are the forces which actually affect the businesses, and which actually put businesses into they push businesses, like, the threats of shareholders, the suppliers, buyers, threat of new entrants, etc., etc. These are the things which would be coming in. Now, when we talk about environmental analysis, see, like businesses right now, even in organizations, let me just draw that for you. Now, in organizations like these, what's happened is, in fact, many organizations and in every examination scenario, what's happening is organizations are focusing and also asking questions based on the lockdown scenario. How are you going to manage it from this lockdown scenario? Suppose a business was going on well, it was going on very good, and then suddenly this lockdown happened. It was based on now you can say that this lockdown is an external calamity which has happened, an external factor which has happened in the organization. This was not controllable for the organization, they had to shut down. Now, with that shutdown, the business got stopped at that particular time, and then slowly the business got, what do you call, rendered into, or it went into with, it came up with better solutions, it came up with revised operation plans. Now, with that revised operation plans and all, they came up with something which is online, they came up with something which is, more productive towards, the current scenarios. The point is, when they have come back with, some of the solutions, the point is the customer ready to purchase the product? See, you are good enough, you are financially viable, and you are ready to sell the product, you have all the systems and structures ready. The point is the customer also willing to buy? See, the customer is not willing to buy, the customer's purchasing power has gone down. Now, when the purchasing power of the customer has gone down, people like us who want to be stable, they still face it a problem. In fact, this is a problem in countries where the government do not intervene properly and do not have the work done properly. Then things will go haywire only. All right. Now, let's just see in here the macro environment, which is nothing but the pest analysis, nothing but political, environmental, social, and technological factors which affect the organization. And then the industry level is nothing but the Porter's five forces. We'll try to go into with some real time examples. As you can see in here, like political factors. Now, political factors in an organization, how it would be affected. Now, we actually have already discussed about this in the previous papers, which is performance management and management accounting, but still, let us just discuss about it. Like, suppose the government can come in tomorrow and announce a policy for GST is no more, they come up with something else, they come up with something, central tax. The point, the GST, they came in with VAT, and VAT is not value added tax, sales tax. These all are the things which were integrated in it. Now, the organizations or the government can come up with a policy like GST is going to include all excise duty, customs duty also, if possible. If suppose they come up with that, now, is this going to affect the organization? Yes, it is going to affect the organization. In fact, let us just see, in 2016 in India, when GST was not there, the regulation was not that strong. But after, in 2017, 1st of July, when GST was announced and it went came into place, within 1 year, what happened is in 1 year what happened is the taxation and the regulation became strong enough. Now easily you cannot just have your bills and you do not charge taxes, you do not collect taxes. The government will not say that you cannot do, or based on that you need to collect taxes. And the leniency which was there, that was gone, and actually it is a bit strict right now. You cannot just easily go, like, without GST. Every supplier or customer, those people are also asking that, can you give me a GST invoice so that we can claim back our GST. So that happens with maximum organization, and it is happening also. Now, coming on towards one more factor of the government stability or government policy, in 2016 November, one more thing which happened, which shook the nation and also took the economy as a toss. The greatest, or one of the great economists of our country, Raghuram Rajan, he said that there is a problem with, there it is a big problem. It is a big blunder with the uh, demonetization which has happened. The supply and flow, India was on the verge to become, a good power, but then this sudden demonetization has affected it drastically. Before the demonetization, few months back, he actually resigned from that post. He was not removed. He did not retire from that post. He resigned. He left that post because he could not have proper control over it. The political influence was there, huge, on that organization. In fact, do you know that organizations like Standard and Poor and Moody's. Now, these organizations are credit rating organization in the United States and European organizations. These are credit rating agencies. Now, does this credit rating agencies do? How is this, coming into the picture? Is that in 2008 we were shook by a huge recession. Now, this recession, if you just go and watch a documentary about that recession which had happened, if you look into that, the government which was there at that time, they used to appoint people from organizations like Goldman Sachs. Now, Goldman Sachs, or people who are controlling the stock market, or people who are influencing the stock market, or people who are doing all the pumping and dumping of their funds in the stock market, as their senior advisors. Listen to this. They are appointing them as senior advisors. Now what will happen to the public then? Like, suppose Iceland was a very good country. Iceland was a very good country till 2000. Till 2000 it was very good. It was rich with mineral reserves, mineral resources. What happened is, organized politics, or you can straightforwardly say that, the government, they actually sold their country to banks, and banks came in to lend in more money. And then after they lended in money, they also went on to use those natural resources. In fact, not only use but abuse those natural resources. And when they did that, the country went down towards the recession, and also one of the countries which was most affected by the 2008 recession. In fact, Raghuram Rajan, in 2005, in an IMF paper presentation. At that time, he was the head of International Monetary Fund. He actually said that at that point, okay, we are heading towards a big recession, and this is a bubble which is going to burst. And at that time, people did not take him that seriously. All people who were there from the stock exchange, from the market, from the Wall Street, were fine enough. Kuch bhi nahi, like that, it's easy kind of a thing. But these people knew it, that it is coming. Now how can that happen? Is nothing but this government influence is there more in here. The government could actually, suppose, go out and there, stop these things which were happening, and apply regulations. But if suppose they do not apply regulation, and then there is deregulation happening in the organizations or the markets, then it is the loss for the public at large, a big external factor. Then economic factors, interest rates, inflation, unemployment, business cycles. This is one big factor. If suppose, let me just tell you about what happened also with this recession, one of the things which were there in the 2008 recession, is that what do people used to do? There's nothing but, in fact, I was also explained about this concept about the eh, your loans which are backed up by insurances. So what used to happen, there used to be a chain which is created. Now this is such a funny chain which used to happen in organizations. Suppose in the late years, when loans were given, even right now the loan process has become like this, but for some people it is not like that. Suppose this is an institution which is going to give loan to another to a person or an organization. They are going to give a loan to them. What will they do is nothing but they will look into how is the business going on. They look into that how the organization is going on with their employment, how the organization is going to pay them on time. They look into it, or how the individual is going to pay them on time. They'll look into that. Now what happened here is that, if suppose you were credit worthy enough, you were given loan. But in the early days, or in times of 2001 2008, what used to happen is nothing but one person or one organization, what did they used to do is nothing but they used to give a loan to a person after checking their credit score. Now, when they have given a loan, they create a collateral bond for it. Now, when they create a collateral bond for it, they take an insurance backed for it. Now, when they take an insurance for it, then insurance people, they actually go ahead and put it into the market again as making a CDO. What is that collection of debt covenants? It is. I'll get back to you with a proper terminology with that. See, the point here is the person who is issuing the loan is not the person who is going to suffer if he is not getting the money back. Is not the person, because there is insurance backed up with it. If he is not paying, he'll get it from the insurance people. And the insurance people, they have had sales. Based on that sales, they had issued securities in the market. Then it goes on towards the market only. Now, if suppose I have to give you loan, I'll give you loan. And if suppose you do not pay me back, I'll get the money from the insurance. Now that's a safe side for me. Now, if that is a safe side for me, what will I'll do is nothing but I'll keep on issuing loans and notes, and that will be bad loans, bad debts that will not be coming in from anywhere, because the person who is going to get that loan is not going to make any economic activity from it. Now, when there is no economic activity which is happening, then that results into unemployment, inflation, and then the interest rates goes up, etc., etc. I hope that you guys are getting it and understanding it with me. Then comes in the social factors, this best macroeconomics. You can see in here that population demographics, social mobility, income distribution, lifestyle changes. These all are the factors which affect the organizations at large. Then technological factors, speed of technological transfer, the rates of obsolescence. Now, when Steve Jobs came in with Apple, he came in with Apple. He launched Apple in 1984, 1984, if I'm not wrong. And at the same time, 1984 or 85, somewhere like that, or 86, I don't exactly remember. At the same time, Microsoft also launched in the same year. What happened is, when they came up with the system, which is Apple One, they came in with Lisa. Then they came in with Apple Two, and then they came in with Macintosh. Macintosh flopped drastically. Then later on they came in with iMac, and then later on with the iPod. Then later on there were many inventions which came in with Apple. The point is, there is a regular changes, and there is a regular addition and regular innovations in towards technology. Now, when that technology is regularly innovating, then what happens is it is tough for you to understand those technological changes which are happening and be with it. To be with it, you need to be strong enough to learn that technology. And most of the times, you are not able to learn that technology. Like, suppose you see in here, one organization, he or they follow one particular software. Suppose they are following SAP. Later on, what do they want is nothing but they want to migrate towards Dynamics 365. Now, when they want to do it, what happens is, people who are aware about that particular technology, or who are ready to learn that, they have their jobs in hand. And those who are not ready to learn for it, they do not have jobs in hand. In fact, they lose out jobs there. All right. So now, Let's move on further with this pest. I hope that this is mostly understood by you students. So there is a short illustration in identifying CSFs and KPIs, which are CSFs and KPIs, which we have done it in the earlier chapter. Here is nothing but revising those targets according to how these factors are affecting us. Like suppose, if so, as I said you earlier, that with this lockdown, many things have changed. I'm not talking about the COVID disease. I'm talking about the lockdown. Now with that lockdown, many things changed. Now when that many things changed, what do you need to do? You need to revise your concepts of pest with on which you have set your targets. Like suppose political influences which are going to come in. Based on that, you need to revise your targets which you have kept earlier. Now when you revise those targets which you have kept earlier, the point is you need to understand and have a proper relationship, or you need to have a proper understanding about that, how you can get in those, or how you can actually revise your targets based on the current scenario. All right, moving forward, you can see pest analysis and performance measurement. You need to have a proper things in place so that you can measure those. Then comes in the Porter's five forces. I've explained it many a times talking about the Porter's five forces. Again, I'm here to explain you about this. My Professor Michael E. Porter, he's head of Harvard University, heading strategy over there. There he teaches. He has around 19 concepts and books which he have launched, and then there are many more awards, honorary doctorates which he has received. The way he has actually given these concept towards business, and says that this Porter's five forces, this Porter's five forces can be used in any industry, any organization can use it, and any means you can use it. Now what does he say is nothing but there are five forces which on and on keep on banging on the organizations, so that they keep on forcing the organization to be better or be out of it, be better or be out of it. Now what are those? Number one is nothing but your number one, number two, whatever you can name it. You can see the supplier's bargaining power. Now let me just tell you, Mr. Michael E. Porter was a aeronautical engineer, and being an aeronautical engineer, what did he do is nothing but he went into the airline industry. And the first theory which he came up with, the Porter's five forces, or at the time when he launched this Porter's five forces, he compared these Porter's five forces with the airline industry. And I'm also going to do the same. I've been doing it previously, but today I'm going to add on with some topics and concepts here. I'm going to apply this five forces into a hospital, into a hospital, and also I'm going to apply this into an airline industry. Now you can also say that hospitality and hospital, these two things would be there considered in this Porter's five forces. Number one, supplier's bargaining power. Will you supply, or will the supplier, which is nothing but a person who is supplying fuel to the organization for an airline industry, is he having a right, or he is having right to bargain? Yes, he is having. The same way, the other way around, in the hospitals, do they bargain with the supplies which they are going to come in? They actually do not bargain. They have a immense demand, and based on the demand, they would say that okay, yeah, it's fine, whatever it's coming in. The supplier's bargaining power would be a bit less, because you cannot just directly go in there and supply to them. Then comes in the buyer's bargaining power. The buyer's bargaining power in an airline industry, what you can do is nothing but you can search for different flights. Now when you search for different flights, you can choose which one is the cheapest. You can choose which one is the cheapest and take that and go ahead with it. Whereas with hospital, do you use bargain there? The answer is no. The answer is no. Now, threats of threat from substitutes. Now, who is the substitute to airline? Is nothing but train. Who's the substitute? Bus is a substitute towards airline. Now, this is somewhat yes or no depending on which place you are traveling. There is threat, there is somewhat less threat. Suppose if it is a hospital, What is the threat from substitutes? Nothing. People who are coming in from Unani medicines, who are coming with herbal medicines, say that this is the best way nature can cure properly, rather than going towards those machineries and all. So this is a substitute which you can have towards hospitality. But the threat of substitute to hospitals is a bit less, because most of the times you'll go to those people only, rather than going towards herbal medicines. It is a bit less when compared. And with the airline industry, you can see that you'll go towards the cheapest flight, no matter who's going to give it, because the quality which you're going to receive is almost going to be the same. Then comes in potential threats from potential new entrants. Now when new entrants are going to come in towards the organization, what happens is, like, suppose there's a new hospital going to be built. Now when a hospital is going to be built new, it will take some time. All right, it will take some time, and it needs proper approvals. Now when there are proper approvals, then only that hospital can come into the place. Whereas with the airline industry, if you are ready with this much of investment, and you can buy these planes and manage these stuff, you can go ahead. You can go ahead and get started with an airline industry. It's not that difficult to get into. So the barriers of entry are low into the airline industry, whereas the barriers of entry in a hospital industry is a bit high. All right. Then next comes uh, competitive rivalry. Now, this competitive rivalry, let me just tell you, with the airline industry, competitive rivalry is a bit high. Competitive rivalry is a bit high. Now, why is this competitive rivalry a bit high in here? Is because, see, you directly go towards booking your airline ticket towards your website, airline ticket booking website. Now there, when you go, what you'll find, you'll find organize different airlines. You'll find the cheapest airline, and you'll book it, and you'll go forward. As simple as that. Now with the hospitals, what is the competitive rivalry here? It is a bit less. Either you go here or you go there. They are not actually competing. Nobody tells that for come to us, our x-ray is a bit low. Come to us, our this treatment is a bit low when compared to other organization. Nothing is happening like that. Do you see that we are better than other hospitals? Nobody says that, because they know that there is enough demand, there is enough supply, and it will keep on coming in. All right. So now I hope that you have understood the Porter's five forces, how they are affecting the organization, and which one is having high and which one is having a low. Now, let me add on one more point in here. See, the threats, the threats of the threats of an airline industry is a bit high. Yes, it is a bit high. The threats of supplying power, buyers, bargaining power, threats of substitutes, the threats are a bit high. Now, when the threats are high, what happens is they always go on towards continuous improvement. They always go on towards continuous improvement. They want to be the best organization among among all. They have, like, suppose if there is 100% work which is happening, you will find 0.1% of problems there. You'll find how much problems there? 0.1. Like, suppose how many flights have flown till now, till date? You'll say billions of flights or millions of flights which have flown. How many have crashed? You'll have them on your fingertips. That much is the crash ratio, or that is nothing but that is actually the failure ratio. Now, the other way around, the threats of the industry, are they there in a hospital? Threat of new entrant, low. Threat of bargaining power, low. Threat of suppliers, sorry, buyers bargaining power, low. Threat from substitutes, low. Now this is a very good industry now, according to Porter's five forces. But what is the level of success in here? Suppose there are 100 patients going in there. How many patients are all getting success? The thing is, there is lots and lots of lack of proper systems in the hospitals. But why? Because there is lack of proper systems. Is because it's okay, it's fine, because the demand is more. The demand is more, supply is less. They say, okay, that's fine, that's going on and on. There's no improvement. Like, suppose if there is one problem with an airline industry or one problem with an airline, what they'll do is nothing but they will strive for to come over it. They'll try to come over it. But if suppose one hospital is having a problem coming over it, I've seen it a bit less only. All right. I hope that you guys are there with me and you guys are understanding it with me. All right, now let's move forward. Now, these porters five forces, they have properly. I have actually properly put it down in front of you, so I'm not going to read every line by line in here because the explanation is down, done, finished. So you guys can go through this topic once you have gone through this class. You can go through the topic and you can try putting more industries here. Now, if you put more industries here, you'll be able to apply these five forces and say that which industry is having low threats, which industry is having high threats. You guys can go through it. There's a short question. Use pest and porters 5 foot, identify the use of external environment and discuss the impact of these factors on the performance of the railways in the UK. Now, I'm not going to answer this right now. What I want is you guys need to do it, and tomorrow we'll be doing a session based on the tomorrow we'll be doing a session based on the test your understandings and the exam kit questions. For now, we'll just be going through the explanation of the topics. Now, the impact of stakeholders. Now, who all are the stakeholders? These all people are the stakeholders. I have already explained it a lot in the F1 and also in the F5 topics, that stakeholders matter a lot. Also, it is there in the SBL, strategic business leader. Now, stakeholder matrix is there. Stakeholders have lots and lots of interest in the organization. They have lots and lots of power in the organization. Now, interest and power is there in the organization. What to do in here for the organization? Understand in here that some stakeholders will be having high power, some stakeholders will be having low power, some stakeholders will be having high interest but low power, some people will be having high interest and high power. What do we need to do with them? Now, let me just explain that to you. First of all, that there are stakeholders. Now, stakeholders are nothing but your shareholders, managers, employees, suppliers, etc., etc. These people will have conflicts against each other. Now, this is ongoing actually. Conflicts with stakeholders is something which is ongoing since long time. Now, what are the conflicts between these stakeholders? We are going to talk about it. All right, so moving forward, you can see here the conflicts which we would be having, and also how the stakeholders influence on business performance. There's a proper matrix which is to be understood over this, which is there in our business and technology, which was accounted in business previously. As you can see in here, the level of interest which is high and low, and level of power which is high and low. Now, in this high and low, what you need to understand is that, see, people who is having a low interest and he's having a low power, people who are like, suppose, very lower level employees of that organization, they do not have anything to say in the organization, they do not have any power, they do not have any interest. Those people, you don't need to, the organization does not need to, bother for them, not need to think for them, because it's minimal effort which you need to do them. Then comes few people, like, suppose, let's take an example of Apple itself. Let's take an example of Apple only. Now, what I want you to understand is that, suppose one organization is having high interest and high power. Sorry, some stakeholders are having high interest and high power. Now, when they are having high interest and high power, what happens here is that these people are the key players which actually run the organization. Now, who can these people be? Is nothing but the management of the organization can be these people who are actually the key players. Understood this? Now comes in a bit tricky in here. People get confused, right? How is the high power, low interest, high power, low interest? Do not think about this. See, the person who is having high power, now person who is having a high power, like, suppose, the government of that particular land, the government of that particular state, those people are having high power and they are having least interest that what you guys are doing. Now, what do they do is nothing. What you need to do is nothing but keep them satisfied. Keep them satisfied. so that they know that what's going on in the organization. If there is any grant which is to be received, or you have to give it something, you are paying taxes on time, they are having high power, they can come, they can stop your organization also. So what you need to do is nothing but keep them satisfied. All right. Now the other way around, what you can do is nothing but those people, the customers which are there, the customers are the boss of an organization, who can literally do anything to your organization just by spending their money somewhere else. What you need to do is nothing but keep them informed. Keep them informed that what's going to happen next, how is it going to happen. So that's what these branding organizations are also doing through the social media channels, so that keeping them engaged in what's happening, keeping them informed is what's going to happen next. That's what you need to do. All right. This is what is with the Mendelos shareholder power interest matrix. Mendelos shareholder power interest matrix. You need to remember this. Suppose in your examination, if it asks you that, according to Mendelos matrix, how would you map them properly in this particular organization? Then that time you must not say that Mendelos is power interest matrix, or Mintzberg's organizational structure and culture. You must not get confused over there, and you must also not get confused like whether it is Mendelow's power interest matrix, or is it going to be Maslow's hierarchy of needs? Okay, do not get confused. Maslow's hierarchy of needs is also going to come in here. We are going to talk about it too. And now, moving forward, Mendelow's matrix. I have already explained about it, so we do not need to go ahead in that too. You guys can go through it and also go towards the test your understandings. Anyhow, test your understandings, we are going to do it in the tomorrow's session. Now, see this conflict between the stakeholders. The shareholder wants what? Profit. He wants profit, whereas wages is to be wanted and needed by the employees. They want that to be increased. The shareholder want more profit, same with the customer wants lower prices and high quantity. Now this can be explained by another Excel sheet. Let me just prepare an Excel sheet for you and show you that how exactly this is helpful for organization. Why is this not moving? This is okay. Let me just increase the size so that I can show you properly. Suppose this is the sales of an organization. I'll minus my COGS, cost of goods sold. I'll have my gross profit. Out of my gross profit, I'll minus my indirect expenditure. I'll get my operating profit, or I can call it earnings before interest and tax, or I can also call it uh, profits before interest and tax. Later on, what I'll have is I'll deduct is nothing but my interest. I'll get profits before tax, or I can say earnings before tax. After that, I'll minus my tax here. Then comes my earnings after tax, or you can also say profits after tax. And then this will be the amount. I'll actually also minus my preference dividend. Preference dividend will also be minused here. After minusing preference dividend, I'll have earnings available for equity shareholders. Earnings available for equity shareholders. Now this earnings which is available for equity shareholder, understand this. Suppose the interest is more. Suppose the interest is more, what will happen is you'll be paying more and your profit before taxes will be less. Now when your profit before taxes is less, your shareholders want, why are you actually taking loans? Why are you taking loans? They'll ask. They'll say that why is it even required? So these are the conflicts which will happen, whereas the employees will say that no, our salaries should increase. Now when the salaries are increasing, these indirect expenses are increasing. When these indirect expenses are increasing, your profits will decrease automatically. Now when this is happening, then the conflict is coming between these two people, these two stakeholders. I hope that you guys are able to understand this. Let's move forward in here now. Okay, sorry. Yep. Resolving conflicting objectives. What you need to do when sorry what you need to do while resolving these conflicts, what you need to see is nothing but first of all, you need to apply the power interest matrix and see who is having an high and low powers and interest. According to that, resolve them. And then you can also see, you can prioritize, you can negotiate, you can satisfy those stakeholders, you can give sequential attention, you can give side payments, you can give exercise of power. So these are the things which you can do for the stakeholders which are creating nuisance and which are creating conflicts. Because at the end of the conflict, maybe sometimes what can happen is that, the shareholders can pull out their money from the organization. Now that's a big problem to be there, so make sure that you do not have that problem in the organization. All right. Moving forward, the impact of ethical issues. Understand this. Uh, what happens in this ethical issues is that the environment should not get harm from the activities which you are doing. In fact, many organizations have come up with this initiative that they want to give it back to the to the environment. Like, I don't remember the shoes, which is Adidas or Nike, which one it is, I don't know. What did they do is nothing but they went on, they cleaned up an ocean, not ocean actually. They cleaned up a seashore of an ocean and took all the plastic. With that plastic, what did they do is nothing but they made shoes. They actually made shoes with that plastic. Now when they made shoes with that plastic, they have done something which is good for the environment and for the public at large. Now when that is done is nothing but this is giving back to the society, giving back to the environment. All right, as you can see in here, for example, is it ethical to experiment on animals, drill for oil, build roads through the countryside, or allow smoking in public areas? These are the things which you need to stop. Like, suppose I guess one country has come up with a rule that uh, you cannot smoke at all. Smoking is banned here, or alcohol is banned at some places. You cannot have that in public places. So all these things are to be understood by organizations at large, and they do it according to the need of ethics. Now ethics and all, I hope that you will be able to understand it and relate with further. Let us go forward towards CSR. Now CSR is also one initiative. Like, suppose Deloitte, every time in Hyderabad itself, not even to go anywhere else, Deloitte have their one day off, or almost all organizations have a day off, and they want to go and do some community service. They'll go to an orphanage, they'll go towards planting some trees, or they'll do something which is giving back to the society. Because they were privileged, they got something, they are working in good places. There are people who are underprivileged, who must get attention also. So there are organizations which go forward and help them. Like this, being on a regular working schedule, they have a schedule mapped for this, that we have to do this thing over here. So understand this, and they do it. Now with that CSR strategy, they want the organizations to give it back to the environment at large. Like, I don't remember the organization's name. I guess Wipro or many organizations like these are actually, giving oxygen cylinders. They are having steel manufacturing people. They are having oxygen cylinder because there is no lack of oxygen. There is a lack of oxygen supply properly. That the cylinders are missing. These things are missing out. So those are the things which are to be done, and that comes under CSR. And people invest, organizations invest huge in that. CSRs and metrics to be get done. You guys can go ahead with that and solve these, test your understand, not solve, actually explain these test your understandings, and then we can go in further. Now what we'll do is we'll pause our session for today here, till here. Tomorrow we'll get started with political climate, and then go further towards the third chapter also. In the meanwhile, what I would want you guys is to complete these test your understandings, these 6 test your understandings, and also go towards the exam kit, and also have some relevant questions, and go through those relevant questions which we have already completed in 1.5 chapters, so that you guys can have a proper grip of the examination which you are going to come in the next few days. Your examination is in the next, I guess, 35 days. You have your examination, so prepare well for it. Try doing it, one chapter at a time, one chapter at a time. With that, what will happen, your preparation will be strong enough. Don't look into, like, once we complete all the portion, then we'll go and study. Don't do that. Do it one day at a time. Try doing finishing one topic at a time. This will help you ease in your preparation. All right, looking forward to see you in the next session.